Let's dig in with our panel today. KPMG Chief Economist Diane Swonk is here, along with CNBC Senior Economics Reporter Steve Leisman. Welcome to you both. Steve, we mentioned one nugget out of many.
Which I didn't know you were going to mention, so it's like a mind meld here.
Is it the same one?
And transportation and warehousing.
Yes.
And I came with charts about that. We didn't even coordinate on this. So that is one of what I call at-risk jobs from this report. Look, it was a good report. Don't want to take away from that. But there are a bunch of categories here. Transportation and warehousing is one of them. Federal government is another one where it was only down 9,000, could be down more. Retail was down 1,000. That's a lot of small business. That could be a problem there. But what I did is I put together a chart of transportation and warehousing versus the Dow Jones Transportation Average. Okay, so when that falls, that tells you something's going on in the DJT. And if you look at the chart, a couple things I want to show you. First of all, start on the left. You can see that jobs fall in the first instance in 2000 after the great financial crisis, somewhat after. Look in the middle where jobs ignored the decline in the DJT, and then look to the right at the pandemic right there, and you could see it was instantaneous. They lost, the DJT fell and the jobs were lost. And now if you could just focus all the way on the right side, you can see the decline in the DJT, but not a decline in transportation employment. So the question becomes, does this look more like 2009, 2010, where there's a lag between the time that the stocks fall, reflecting an expected decline in cargo, and then the jobs follow?
You know, a lot of people have said, look, this is a glimpse of the economy pre-tariffs. But, I mean, we know the survey week was April 12th. I mean, it typically is.
There was time to react.
There was time to react.
I think there's two things going on. One is that this economy is very dynamic. They have an ability to change. There's two, I think, is also people are retaining workers that was so hard to hire them. And three is when you're purgatory doesn't mean you're in hell, if I could say that from a religious standpoint,
There's
is my understanding.
Still a chance, baby.
Right. No, there's still a chance, right? So just because you're uncertain about where things are going doesn't mean you're going to panic. And we've seen that in the data, that there is not the firing. There may not be the robust hiring, because we did have a big revisions, by the way. It may not be the robust hiring you might otherwise have, but there is not the firing going on.
Let's bring in Diane. For what are the data points that jump out to you, Diane? Welcome. And what are the other kind of high frequency or anecdotal points you're watching to see where we go from here?
Well, it's great that Steve pointed that out in terms of the transportation and warehousing, because that is where the vulnerability, I think, really is. That's important because we've already seen shipments from China come to a virtual standstill. They didn't come to a virtual standstill right away. In fact, anything that got on the water immediately did not get tariffed. And so that actually boosted some of the activity during the week that this survey week was going on, and people were still stockpiling and putting stuff, scrambling to get it into warehouses. So I think that's very important. We also know that today is when the de minimis tariffs kick in, and that is really important because that stops a lot of online retail. Everything from all of the online retailers, but specifically those based out of China directly, but also shipments are being double in cost, from $100 to $200, in addition to the 145% tariffs being put on many of these online retail goods coming in from China. That's important as well. The smaller businesses, we saw earlier in the week, the ADP report, it doesn't forecast this report, we know that, but it has important information in it. And one of the things that really struck me was where the declines were, and that was in businesses with 20 to 49 workers. Those are businesses that are small businesses that are the most vulnerable to tariffs going forward, and they have the least amount of margins. Those are also the places this survey tends to miss them the first time around, and we don't get them until the revisions. And that's why we're worried about it a little bit until we see the birth and death rate and what actually happens to many of those smaller firms going forward. They're the ones that are going to determine whether or not we can keep these kind of job gains moving forward.